Will Harmon, tax attorney, CPA, IRS enrolled agent with Harmon Tax Resolution. Hope everyone's doing well. I'm here to discuss with you IRS installment plans. If you have a tax balance and you can't pay the full amount at once, there may be several options that you can choose from in which will allow you to pay it off over time. The IRS has the statutory authority to enter into a written agreement with the taxpayer, enabling the taxpayer to make payments over a period of time if it affords the collection of a tax. Now, there are four types of IRS installment agreements I'd like to discuss. First one is the guaranteed installment agreement. The next is the streamlined installment agreement, which there are two types. Each are based on a dollar amount. And then the non-streamlined installment agreement. And finally, the partial pay installment agreement. The first plan we're going to discuss is the guaranteed payment plan. It's guaranteed because if you meet all the items, the IRS must accept the plan. Here are the items. The first item is that the tax debt is $10,000 or less. Now, it's only the income tax. It does not include penalties or interest, so $10,000 or less will allow you to apply for this plan. You have been compliant for the last 5 years, filing all your tax returns. You have not entered into an installment plan over the last 5 years. You also agree to adhere to the plan over the next 3 years. You have 3 years to pay the plan off, and you have to stick to the terms and comply to all the tax regulations. Now we're going to discuss another type, which is the streamlined installment plan. And there are two types here, and they're based on dollar amounts. The first one is for up to $25,000, whereas the next one is between $25,001 and $50,000. Now, unlike the guaranteed installment plan, this balance also includes interest and penalty, whereas the guaranteed one only has the tax. So bear that in mind. Now, this plan is up to 72 months or whenever the collection statute expiration date expires, whichever one is shorter. Now, the collection statute expiration date is a 10-year period from when your tax was assessed. Now, for example, let's say you have a tax assessed back in January of 2018. That would mean the collection statute expiration date would be January 2028, which is 5 years from now or 60 months. So in that scenario, you could only have up to 60 months, the collection statute expiration date, versus the 72 months, that's the top amount allowed for this plan. Just like with the guaranteed payment plan, under the streamlined installment plans, there are compliance requirements. Going back, you have to be compliant, and you filed all your tax returns, and your payment obligations are current. And in addition, going forward, during the duration of the plan, you have to meet all filing and payment obligations. Otherwise, the IRS could terminate the plan, put you back in default status, and then begin their collection apparatus. Now, if you were to miss a payment, but you contacted them, most likely they'll let you get back on the plan. One of the key advantages of both the guaranteed and the streamlined payment plans are that you don't have to submit complete collection information statements. And that's where you provide the IRS with in-depth information about your assets, everything you own, what you owe, how much money you make, where it comes from, and what your liabilities are. It's very limited what they may ask you if they ask you anything. If you have a balance between $50,000 and $250,000, there still may be an option to get a payment plan without having to submit to the IRS complete financial information. Okay, this is where you'll still have to be compliant like you are with the tax filings and the going forward filings. You'll have to pay the debt off within your collection statute expiration date, which could mean that it's beyond the 72 months. Let's say your collection statute expiration date was for 84 months away from now. You could have up to 84 months to make payment. Now, the one caveat here is you have to set up either a direct debit agreement or a payroll deduction. Now, the one drawback to this plan is that if you have sufficient assets, the IRS could require you to liquidate them if they can pay off the full balance or a substantial amount of the balance. This brings us to our next type of installment agreement, known as the partial pay installment agreement. If you're unable to pay the entire tax debt by the time the collection statute expiration expires, then you may be eligible for this. And it is what it says, partial pay. You don't have to pay the full debt. However, it's only temporary in nature in that the IRS, if they grant you that status, will review it every 2 years to determine whether you remain under that status. In order to qualify, you'll have to complete a collection information statement as to whether you qualify for the plan or not. You'll have to recontinue to submit this statement every couple of years, and each time the IRS will make a determination. Now, if you do not qualify anymore, you'll go back into another collection status plan. Now, the collection information statements have some nuances that you need to know when you're completing them. Otherwise, you may not maximize the efficiency of it. And this is the case for any type of resolution. I'm getting a little off topic here, but for example, an offer in compromise, you have to fill out a collection information statement. And if you don't know all the nuances of it, you may not fill it out correctly or maximize the efficiency of it where you qualify. There are many who do not qualify for some of the resolutions simply because they don't know how to fill it out correctly. They don't know all the rules, the ins and outs of it, like a tax professional may. Now, one of the advantages of getting under a partial pay installment agreement is that your collection statute still runs. So even though, and once it runs out, you don't have to pay any more of the debt. So that's how that works. The other thing is, as it runs, you may become eligible for a different type of resolution. Maybe an offer in compromise is now on the table for you as your CSAD gets closer. It could even be that your situation, unfortunately, has gotten worse, and you may then qualify for currently not collectible status. And that could occur during this process while you're in the partial payment installment agreement if your financial situation were to change for the worse. There's another type of installment agreement called the In-Business Trust Fund Express Installment Agreement. This is for companies with employees, and you have to have a debt of $25,000 or less as of the time the agreement's been entered into. Now, to qualify for this, you have to be able to pay the debt within 2 years, 24 months, and also agree to get into a direct debit installment agreement. That's if your debt's between $10,000 and $15,000. And finally, if you don't qualify for any of the installment agreements I've just mentioned, you may qualify for the ordinary installment agreement, but this is where you have to submit a collection information statement to the IRS along with supporting documentation. There's no minimum or maximum amount for this. You have to show that you can make payments before the end of your collection statute expiration date. Bear in mind that if you're considering entering into an installment agreement, penalties and interest will continue to accrue on any unpaid balance during the time. Now, while you're in an installment agreement, the penalty for not paying tax is actually cut in half under an installment agreement than if you didn't have one. It's 0.25% versus 0.5% per month while you're in an installment agreement. You can apply for an installment agreement simply by completing Form 9465 in addition to completing the collection information statement. Now, if your balance is $50,000 or less, you can complete it online. I hope this information helps. If you have any questions or need any assistance, please feel free to give me a call at 772-418-0949 or leave an inquiry in our website contact form at www.harmonassociates.net. The website contains a lot of additional information, videos, and blogs you may find useful. Thank you for watching. And remember, if you have any questions or need any help, I'm here for you. Please reach out. Thank you so much.